Welcome back to this special edition of Switzer. It's time to go straight to the heart of Wall Street. Here's Peter Switzer.
The New York Stock Exchange is the pumping heart of the world's financial system and arguably the world's economic system. We're going into the exchange to interview the legendary Cashin of UBS, who's regarded as one of the best interpreters of the most watched stock market in the world. We're going in right now. Cashin, thanks for joining us on Switzer.
My pleasure.
Before we start talking about the important stuff, how long have you been working here at the New York Stock Exchange?
Well, I'm 50 years a member now.
Yeah.
I came when I was a callow youth in swaddling clothes and became a member at age 23,
yeah.
And that's been 50 years now.
Yeah. Okay, now I've described you as one of the world's best interpreters of the most watched market in the world, the Dow Jones. You've been working with it for a long time. We're up about 63 points this morning. What do you think's going on right now in the market?
Well, I think a couple of things. We had a quite volatile day yesterday globally. There were concerns about possible recessionary trends in Europe. That tugged on things. The gold market has turned quite volatile. It was both up and down yesterday. Today it's down about $20 as we speak. So the markets are trying to grapple with themselves. A little concern here in the U.S. That the Black Friday, the big shopping day after Thanksgiving, might not have been such a big shopping day after all. And that began to hurt things. But the market's trying to right itself after the sell-off yesterday.
Yeah. What's your feeling about the U.S. economy? Are you expecting it to be fairly strong in 2015?
I think it will be stable. I don't think it will be a runaway sense of prosperity. I think we'll have growth somewhere slightly less than 3% in GDP, or maybe at 3%. But it's historically been a wonderful, wonderful time for the stock market. You know, humans are big fans of patterns. We're the only animal that doesn't have to hunt and look for a mate in the present. Only what you can see and smell. We're smart enough to be able to read old tracks. And in our business, those old tracks tell us what the market's done years and years in a historical pattern. And 2015 is, based on history, almost an ideal year for the bulls.
So the good things are what? It's the third year of a presidential cycle?
It is the year before a presidential election,
yeah.
And particularly with a two-term president. You can go back, I think, for about 75 years, and you won't find one loss in the year before a presidential election like the one coming up.
Funny that, Art.
Oh, and Otter still improved that I'm always looking for patterns. A year ending in the numeral 5. It turns out to be pretty good for the market. So we'll hope the economy's smart enough to follow along, but the market is primed to go up.
Okay. What about the Fed? When do you think the Fed will raise interest rates?
I actually think the Fed will delay and, in fact, may not raise rates in the year of 2015. And I think they have a very, very critical problem that I don't see discussed. People talk about when. I'm more concerned about the how. They have pumped so much money into the system that there's like $2.5 trillion in excess free reserves. Now, if they're going to push up rates, what they may have to do is pay interest on those reserves to keep them there. So the Fed, if it wants to go to 1%, it may have to promise all the banks, we'll pay you 1% to leave your money where it is. So they're in a very, very tricky situation. I don't believe historically we've ever seen a situation quite like this.
So do you think Janet Yellen wants to see the U.S. economy growing so strongly she then can take the risk of raising interest rates?
Oh, I think she'd love to see strength. And while they kind of poo-poo it, they really are concerned about the rest of the world. There are signs that there is some financial stress in China. In fact, one of the things helping the rally this morning as we speak are further rumors that the People's Bank of China may make efforts to loosen money further. The same thing's happening with Mr. Draghi, who has lived on promise so far. We're waiting to see if he will put up on his actions. So the market's hopeful, it's anticipatory, and she's got to hope that she doesn't start to raise rates and suddenly things go badly somewhere else.
Yeah.
So that's a precaution.
Are you seeing US companies starting to invest? That was something we've been waiting for 2 or 3 years at least. Are we starting to see US companies invest?
No, the capital expenditures have lagged very badly. We have a particular phenomenon going on in the last 4 years here, a kind of financial engineering. With rates so low, companies can buy back their own shares. So you take, IBM's a perfect example. In many ways, their revenue this year is probably lower than it was 5 years ago. But because they bought back enough shares, that revenue is divided by a smaller number. So their earnings per share looks like it's going up.
Yeah.
It's kind of paradoxical.
Okay. Are you expecting Santa Claus? Are you hearing the jingle bells before the end of New Year?
Again, based on historical patterns, I would think Santa will be here and there won't be any coal in his stocking, I don't believe.
Okay. But some people say, well, maybe he's already come. You know, you're in record high territory. What would actually, excite this market? Is it going to be? I can't see anything coming locally until corporate earnings is going to be in the new year. So it's going to be something from outside, like a China decision or a surprise good number out of Europe. Are those the sort of things that might excite this market?
Absolutely, and the public has been very skeptical. By some studies, there are as much as $10 trillion in cash in accounts not being used. So they haven't bought into the market as heavily. So anything that begins to spark that, let's talk about something probably impossible, but if our elected officials began to cooperate with one another, that might spark things. So there is some opportunity. And the end of the year, a lot of the actively managed funds, the hedge funds and others, have underperformed. And so they're going to scramble to try and get some rate of return to keep you from taking your money out.
Yeah. Are you worried that we're in a long way into a bull market, and 2015 is kind of like a long time for a bull market? Are you worried about that, or do you suspect because interest rates are so low and it's such an unusual circumstance, this might be a long, drawn-out bull market?
Well, it gives every look of that. It looks like it's going to increase kind of incrementally. The market has done better than the economy has.
Yeah.
And so, but there are dangers. You don't do this for 50 years without looking to see where the exit signs are. Every time I walk into a room, I want to know how can I get out if I need to. So you do worry a little bit. If there were some economic negative that popped up, Janet Yellen would have a bit of a problem. She's already got rates at zero.
Yeah.
What is she going to do again? Will they go for another QE? And what will that do to credibility? So while the road ahead looks somewhat promising based on historical patterns and other things, you've got to remain alert to sudden changes in the wind.
Okay, I'm going to put you on the spot. Do you think 2015 will still be a positive year for stocks? Even if it's just a small positive, are you expecting stocks to go up over the year?
I am, and primarily based on that historical pattern that we discussed.
Yeah, okay. Is there anything out there that either makes you super positive that this rally can keep on going, or the reverse, worries you that could actually derail it?
Well, I've learned in 50 years never to be certain of anything.
Yeah.
The market likes to act in a manner that confuses as many people or punishes those who think they know everything. But assessing what I've known, and as I said when we began, I'm very big on historical patterns. I see them recur and recur. So I think we have favorable winds going into 2015 anyway.
Okay, so let me ask you a couple of companies. What do you think's going on with Apple at the moment?
Well, I'm not really qualified to talk on individual companies. I think Apple's had a remarkable performance, and it's gotten everyone's attention. People thought, well, they can't just do better than they did, and yet they have.
Yeah.
They've come out with the new iPhone 6 and the 6 Plus, and people seem to be very excited about it. So everybody thought that Samsung was going to take over market share. but Apple seems to be holding on to the premium.
The only thing that worries me, and I'm a great lover of historical patterns, that's why I often listen to you, but the one thing that worries me, things are changing. For example, Black Friday didn't have the internet competing with it. When it snows around that time, people stay home and still buy.
Right.
Does that worry you a little bit, that the old numbers can't be compared as easily in the internet age?
Well, there's no question. We're living in a new world, and there are a variety of comparisons. You know, people used to go out because they truly believed that you might get the best deal on Black Friday.
Yeah.
Now they've all grown so much skeptical, and they sit home. And the other thing would be a problem would be if you waited longer, maybe it would be sold out, whatever you were looking for. There's less and less chance of that happening now. The competition among the retailers, be it Amazon versus Macy's versus whomever, has been out there. Very little likelihood of things running out at this point.
Okay, one last question. Friday, jobs report, it's always important. If it came through as a very big number, how do you think the market would respond?
Well, I think if it came through as a very big number, there would be some concern about moving interest rates up rather quickly. And that's why I think the Fed speakers, as they move along, need to set the table. They need to prepare us for don't get too excited about this and don't get too excited about that. We plan to stay lower longer.
Cashin, thanks for joining us.
My great pleasure.
It's a great looking room, isn't it? Coming up next, Peter brings us some Australian success stories direct from the Big Apple.